Good afternoon, Annuity World. How you guys doing out there? This is Jeremiah Conjure from Annuity Association, and we're back for another fixed indexed annuity review. Today we're going to be discussing the Accumulator Plus fixed indexed annuity offered by F&G Life Company. So for those not familiar, F&G stands for Fidelity and Guarantee, but for today's annuity review, we'll be referring to them as F&G. So bear with me. I'm going to go ahead and share my screen and we'll dive right in. Before we get started, I do need to start with a quick disclaimer. So we'll get that out of the way and then we'll go from there. Hope everybody's doing well. So today, again, Accumulator Plus Fixed Indexed Annuity. This is an unbiased, independent annuity review by Annuity Association. This is a review, not a recommendation to buy or sell an annuity. F&G has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of annuityassociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. Okay, we've gotten that fun stuff out of the way, so I'm going to go ahead and pull up the brochure and we will get started. Okie dokie. So the F&G Accumulator Plus 10. This is the official brochure. Now there are two versions of this fixed indexed annuity. One that is a 7-year surrender period or contract term, and one that is a 10-year surrender period. This is a pure accumulation focused annuity. So if you're in the market, maybe you're just about to retire or you have been retired and you're looking for that vehicle that will provide you safety of principal with the opportunity to still earn a reasonable rate of return, this annuity may be one to consider. The design of the Accumulator Plus 10 is ideal for preserving your savings. It allows for index growth potential with no downside market risk. So just like any other fixed indexed annuity on the market, they offer a guaranteed 0% floor, meaning in the event of a negative performance for the particular index strategy that the annuity is offering, then you would just be simply credited a 0 for that particular crediting period, and you would not incur any negative losses. This is also designed to meet expenses with access for qualifying health conditions and limited partial withdrawals. We'll get into that momentarily. And it's also designed to offer a legacy benefit with a death benefit offered inside the contract that avoids probate to offer peace of mind. So today's review, we'll be discussing all of the logistics of this particular product. We'll be talking about benefits and features. We'll be taking a look at the index growth strategies that are offered inside this product. We'll look at the specific indexes to see how they're performing. And then we'll also look at the rates that are being offered inside this annuity alongside those indexes to give you an idea of what you can potentially expect from a return perspective. And we'll also look at back-tested performance to see how this product has performed based on the current parameters of the offering to give you an idea of what you can expect. So for those not familiar with F&G, again, it stands for Fidelity and Guarantee. They have been around since 1959, and they are a key player in the annuities and life insurance business across the United States. This particular product that we're reviewing today, the Q3 sales just came out for fixed indexed annuities across the independent marketplace. And this is a top 10 selling product. This particular product ranked 7th overall on the independent marketplace for Q3. So very, very good, very competitive product. Offers a pretty significant participation rate on one of their index strategies, which we'll get into momentarily. And it does offer some decent upside potential that you can look forward to. So as with any annuity, it's a long-term retirement tool. It can be a cornerstone of your financial security and success. In this specific instance, this is a pure accumulation focused annuity. What that means is if you're looking for lifetime income or guaranteed income, there's going to be a better alternative out there other than this particular product, because this one is built purely for growth. It's purely built for safe accumulation of assets using index crediting strategies, and they actually do not include any type of lifetime income rider on this product to allow you to convert to a lifetime income stream. So if you're looking for lifetime income, check out a couple of our other reviews on this page. You can find one there, and if you have any questions, go to annuityassociation.com and we can help you identify the right lifetime income annuity. So again, is this a good option for you? Well, if you're looking for savings protection, if you're looking to avoid market risks while still giving you market-based growth potential and tax-deferred earnings, this is a long-term retirement planning product that can give you access to those options. Nice thing about it is, because of the guarantee on the floor and the fact that tax deferral is available, it makes this a lot more attractive than a CD or bank certificate of deposit. The growth potential is based on two specific market indexes. We have the Barclays Trailblazer Sector 5 and the traditional S&P 500 index. We'll be diving into both of those to give you an idea of where they are today, year to date at the time of this review, and then also dive into the participation rates, caps, and spread rates to give you an idea of what you can expect or hope to earn utilizing those particular indexes. So let's talk about some of the key benefits in addition to the safe growth benefit. Is in the event that you need home health care or nursing home care, long-term care, or in the event of a terminal illness, this particular product includes this rider at no additional charge, which means that you'd be able to access all of the accumulated value in the contract without incurring any surrender charges or market value adjustments. In the event you buy this annuity, and because of it having a 10-year contract term, and you find yourself in the middle of that contract and you have a need for long-term care or unexpected health care costs due to a terminal illness, you can access all of the money without incurring any of those surrender charges or penalties. Very good peace of mind there. And then the death benefit is basically an included benefit that will allow your beneficiaries to access all of the account value without any surrender penalties or market value adjustments in a lump sum, and that it does avoid probate. So very cool feature there. Okay. Now, there are what we call annual free withdrawal benefits included in this product. In this particular case, starting year 2, you can access up to 10% of the total account value. That's principal plus any interest that's been accrued over that period of time without incurring any surrender charges or market value adjustments. So if you're looking to maybe put your money in this product and, if it has a good year or good, couple years, you could withdraw some of that interest that you've gained and not have to worry about any charges or surrender penalties for that. It is available to distribute required minimum distribution. So as you know, age 72, if you have qualified dollars that are invested in this particular annuity, F&G would help you structure the required minimum distribution schedule to meet your required minimum distributions according to tax codes. And we talked about tax deferrals, so that's pretty much it. Pretty simple brochure. But without further ado, let me go ahead and dive into the growth analyzers, what we're going to look at first. So our software takes all of these annuity products available on the independent marketplace, and part of the value in working with Annuity Association is we can show you the top performing annuities using hypothetical back testing to identify the rates of return over the last 10, 15, and 20-year periods. So if you're in the predicament where maybe you have an annuity that you're looking to roll into a different one, or maybe you have a variable annuity and you're tired of paying high fees or not getting the performance that you thought you would. Or maybe you're getting interested in looking for an alternative safe money investment other than a traditional CD or a bond or money market, and you just came across fixed indexed annuities. Maybe you're looking at a couple of them, or maybe you've talked to a professional and they've showed you a couple of them. If you want to compare them and identify which ones are going to offer you the best value from a growth perspective, we can help you with that. Just go to annuityassociation.com, and right on the main page, you can request your free report, and we'll get that out to you in a timely fashion. All right, but today we're talking about the Accumulator Plus, so bear with me. I'm going to pull that up. We'll take a look at the hypothetical historical performance looking backwards. I must say, while this is pulling up, that prior performance does not indicate future performance. So don't use this as just your ultimate decision maker. This is a good idea to see how they would have performed if you own this product over the last 10 years or 15 years to give you an idea. But keep in mind that, hindsight's always 20/20. So we can see how they would have performed based on their current contract rates. But moving forward, these indexed annuities are designed to, and based, your growth is based off of how the indexes perform. So without any of us having a crystal ball and not knowing how they might perform, it's still kind of a guessing game, if you will. But I do like to look at the back testing performance because it kind of gives us an idea of what we could potentially benefit from if the markets performed in a similar manner moving forward. Okay, so we have the Accumulator Plus pulled up. Now, the top performing index strategy inside of this product is the 2-year Barclays Trailblazer Sectors 5. It's a point-to-point strategy with participation rate. It does not currently have a spread, but you'll notice it says with spread. All that means is F&G does have the ability to add a spread rate on this strategy. However, for the last 5 years, it's been a 0% spread. So just want to make sure I point that out. If you're not familiar with what a spread is, basically, in my opinion, the word spread is very similar to when you go to the casino and maybe you're playing Texas Hold'em or blackjack, and there's a dealer rake where whatever goes into the pot, the house keeps a certain portion of it. That's exactly how a spread works. So if you're in a point-to-point strategy with a participation rate, let's say it's 100% for easy math purposes, and the market index goes up 10% during your crediting period, and it has a 2% spread on that as well, then your contract would be credited 8%. That would be, the 10% gain minus the 2% spread. You would get the net number, which would be 8%. So I hope that makes sense. So over the last 10 years, okay, using the 2-year Barclays Trailblazer Sectors 5 point-to-point participation rate, the participation rate currently being offered at the time of this review is 160%. Very competitive participation rate there. And over the last 10 years, the average annual credited interest, hypothetically, if you own this product over the last 10 years from December 31st of 2009 to December 31st of 2019, this performed at a 10.76% average annual credited rate. Very, very good number there. Very high, very, very market-like performance. And keep in mind, all while still having that guaranteed 0% floor, so that in the event, the markets did not perform, you would not incur any losses. This particular product and this particular index strategy, in order to get that 160% participation rate, there is an account fee charged to the principal and interest moving forward of 1.25% on an annual basis. So you see this account fee, 1.25. In some products, it's called an enhanced participation rider, but it's essentially a fee. And what they're doing is, in order to give you that opportunity for the higher par rate, they're charging a fee for it. So if you're in the market for a product that does not charge a fee, we'll take a look. I believe the Accumulator Plus may have a non-feed option as well, but there's plenty of other products in the market that don't charge that account fee. Or if you look at it on the other side of the fence, if you were to go and get your money managed by a broker or financial advisor, they're going to charge in the realm of 1% to as high as 2%, depending on the outfit, plus any product fees that are associated with mutual funds or ETFs and things of that nature, indexes. So if you look at it that way, 1.25% to give your money a 0% floor, higher earning potential with the 160 par rate, and F&G, a world-class, multi-billion-dollar organization, is managing this account to grow your interest. It's a fair trade-off, I believe. So, but either way, it's up to you. If you don't like the fee, we can find a different version for you. Totally up to you. Now, going back to this 10-year performance, you'll see the green number at 10.91% and that red number to the right, 6.77%. This is very important data. I always like to highlight this in our reviews because I'm the type of guy, I'm an optimist, but I'm also a realist at the same time. And in order for me to make a decision on if something is right for me when it comes to looking at an investment, I want to know what the worst possible scenario, what could this look like? And that number in red is really giving us an indicator of what it potentially could perform at its lowest point. And the reason I say that is if you look at the data numbers there, this is from September 9th of 05 to September 9th of 2015. That's taking us right through the global financial crisis of 2007 and 8, where the market was down over 40% in some cases. And even with that being said, for that 10-year period, we still could have accrued over a 6.77% average annual credited interest rate, going through some very difficult times in the economy. So that really highlights the benefit of the power of indexing. With that 0% floor, your money never goes down. So over a long period of time, your averages are still pretty healthy as long as the markets perform more often than not. The key here is you're eliminating those big losses. And that's what really shocks people's retirement portfolios, or when those markets take those big drops and you incur that. So by eliminating that out of the equation, you still have a higher average rate of growth because of the 0% floor. And then on the other side, that 10.91, best period, September 3rd of 09 to September 3rd of 2019. Very, very good data there. Over the last 15 years, 04 to 2019, average rate of return is 6%. That's a key point there too, because it's coming out of the dot-com bubble and then going back in a few years later to the global financial crisis, and then out to 2019, which for some indexes, that was a down year too. So, but 6% average over the last 15 years gives you a longer term scope on what you could potentially earn over that period of time. Okay, so we've covered the growth performance looking back over the last 10 and 15 years. I'm going to look at just real quick, since we have the ability to do it very quickly, what the next highest participation rate is. Okay, perfect. So if you look at the second option here, the difference between the two, the first one and the second, is this is the participation rate on the 2-year Barclays Trailblazer Sector 5 Index, the same one as the first option. But the difference is that they're not charging that enhanced participation rider. So there is no fee on this version of 1.25%. There's no fee. And the participation rate's still at 120%. So if you like the idea of keeping it simple, you don't want to pay the fee, then this is the average rate of return that you could potentially be offered or incur in the event that the markets repeated themselves moving forward. This is the last 10 years, 8.19%. The highest 10-year period, 8.29%, and the lowest 10-year period of 5.17%. And then you have the last 15 years at 4.59%. Very good, very good. And then that third option, there's another 1-year S&P 500 monthly sum cap. That's another enhanced rider charge on that participant or on that fee or on that index strategy, excuse me, and we're looking at a 6.7% growth. So you see the value we're able to add to you as a prospective client. If you're looking for an annuity, you want to know which one's the best for your particular situation. Everybody's situation's different. Everyone's needs and preferences are different, but we have the tool set to be able to help you make an informed decision. Okay, so next thing we're going to do is take a look at an illustration to see how this would look on an illustration. So give me 1 second. Let's pull this up. Okie dokie. We're going to look at a male in Florida, age 64. State of Florida, non-qualified monies, $100,000 investment. And again, here are these index strategies. Cool thing about the software is it tells us which mix of these index strategies are going to give us the highest opportunity for growth, looking back on that hypothetical performance. And you'll see that what's unique about this software is that we're able to diversify inside the annuity. So what's neat about fixed indexed annuities, a lot of them offer multiple index strategies within them. And, some strategies are more equity focused, some are more bond focused, some are what they call multi-asset risk controlled indexes, which have a blend of all of the asset classes, and they rebalance on a daily basis. And so what it allows us to do is, if you want, we can diversify within the annuity to give us the most amount of upside potential in the event of volatility or volatile markets occurring over the tenure of our contract. Now, you are not locked into any one of these participation rate strategies or index strategies. So what that means is, on a annual or biannual basis, depending on which index strategy you go with, you can elect to reallocate your funds to a different index offered in the annuity in the event you're not happy with the current one, or maybe your future outlook looks different or the markets look different at that time. You can pivot and move the funds to a different index strategy or a blend. You could put 50% in one, 50% in the other to give you that diversification across the annuity. But for this particular case, we're going to select the highest growth opportunity looking back on those over that 10-year period, and that happens to be the 2-year point-to-point Trailblazer Sector 5. And so here's what an illustration might look like from them. You'll see we have the 160% participation rate with that 1.25% option fee for the higher participation rate. And then looking at the hypothetical values, what they do is they'll use the most recent 10-year calendar period, and they'll illustrate that over a forward-looking projection to give you an idea of what the interest credited looked like, plus the fee factored in, so that you can get an idea of the growth. This particular index strategy is a 2-year point-to-point. So that means that every 2 years, the contract crediting period, the index crediting period resets. So you'll notice every first year of the index crediting time frame, it's a 0%. But then year 2, it's a 34.15%. Year 3, 0. Year 4, 24.07, so on and so forth. You'll see in this column interest credited. This is the interest being accrued plus the compounding on the principal and interest. And then you've got the red column, which are your fees being charged on the accumulation value as well. And then your green column is the accumulation value. So if we look at the end of the 10-year period, this is using the most recent 10 calendar year period values. The $100,000 investment would have grown to $244,929. You'll see that number also equals the death benefit amount. The death benefit amount and the accumulation value will always equal the same amount as long as that death benefit rider is included, which in most states it's required. Specifically speaking, in Florida, it's required. Now you'll see there's a guaranteed value. That is including, just the worst case scenario, if the market's never provided a return, that is the guaranteed minimum value. The surrender value is the surrender fee being applied at that particular year of the contract, so that if you were exiting the contract without living up to the full 10-year period, there would be that surrender penalty charge, and that's the number you're seeing there. But if you plan on holding this through maturity, which if you're planning to buy an annuity, you need to make sure that you have enough liquidity in your overall estate so that you never have to go in and dip into this for any particular reason. But keep in mind, if it's health related for long-term care or terminal illness, that gives you 100% access to the accumulation value with no penalties incurred. Here are those values for the most recent 10-year period, highest 10-year period, and lowest 10-year period. Now, what's neat about this is if you look at the low period, the orange columns, you'll notice the interest rate from 2006 to 2010 was a 0. That means this index strategy would have kicked off a negative performance, and in this case, because you have a 0% guaranteed floor, you would have only been credited a 0, so you would not have lost any money. And then you'll see that it had those big gains in 2011, 13, and 15. So that was through that global financial crisis that the index would have kicked off that 0% return. So that's good peace of mind, seeing what it would do during some of the worst economic conditions that we've experienced in the recent times. Okay, that is it for that part of our review. I hope everybody's getting their questions answered. If you have a question, please feel free to drop one here on our Facebook Live or YouTube Live, or you can just go right to our website and ask it there. All right, so we've looked at the features and benefits. We've looked at the growth strategy. We've looked at the index options. We've also discussed the enhanced rider charge for the higher participation rate. One last thing that we'll do is take a look at the current index strategies to see how they're performing year to date, and then we'll also look at the last 5, 10, and last 1 year, 5 year, and 10-year periods. So we're specifically talking about the Trailblazer 5 Sector 5 index. So let me go ahead and pull that up. These are all the indexes available in fixed indexed annuities. We look at this on a day-to-day basis. It's updated most oftentimes on a daily basis, and it gives us an idea of really what index strategies can hold true to the market and give us a positive return. And we did a very in-depth analysis back in March when the market was down 20-25% to see how these indexes really performed during very volatile periods. And to our surprise, about 10 of these index strategies were either positive or only down 1%, while everything else in the marketplace was down about 20-25%. So it gave us a lot of confidence in those 10 index strategies on which ones are really going to provide the highest growth opportunity, especially for very volatile markets, which, if you look at what's going on with coronavirus and all this stuff, the elections, the rest of the world, there's a lot of uncertainty moving forward in the market. At any given time, things could be very volatile, as we experienced back in March. And I would feel comfortable showing a prospective client one of those 10 indexes because I know that they can perform even in volatile periods. And the reason why is because they use algorithmic features, triggers that are built in based on the algorithms that are structured inside it. And based on the way the market is moving, on those key movements, if it's triggered, the volatility trigger is activated, the assets inside the index actually rebalance instantaneously and shift to uncorrelated assets based on that triggered event. So it's real time. They do this by the hour and every day. So even during very volatile periods, I had one index strategy that was up over 3% in March, while everything else was down. So very, very cool there. All right, so we're looking at the Barclays Sector 5. So let me pull that up. I've been getting off on a tangent, so I do apologize for that. Okay. So as of December 17th, we have the Barclays Trailblazer Sectors 5. It's actually in the red right now. It's down 21 basis points year to date. So not very good at this point in time. Now, does that mean that this particular annuity and that index is a bad one? No, not at all. Everything is going to have up years and down years depending on the structure of the index strategy. But in this case, if we look back at 2019, it was up 14.78%. So a really good year in 2019. 2018 was at negative 6.82. The last year, it's at 50 basis points down. Over the last 5 years, it's at 5.11. The last 10 years, 5.85. And since its inception, 4.77. Now, the other index that's offered inside the Accumulator Plus 10 from Fidelity and Guarantee, F&G Life. Let's see where we're at here. So the S&P, it is not the total returns. It's the excess return index, I believe. Let's double check. Oh, no, here it is. Yeah. So 13.40 year to date. Last year, 28.88. 2018 down 6.24. 13.74 over 1 year, 12.63 over 5, 11.31 over 10, and 7.17 since inception. So if you're a traditionalist, you like the S&P 500, that is an option in this annuity. But if you want the highest opportunity for growth looking back over the last 10 and 15 year periods, that's going to be the Barclays Trailblazer Sectors 5 Index. So hope that everybody has gotten some value out of this review. If you have any questions, please feel free to drop a note to us either on this Facebook page, on the YouTube live page, or by going to annuityassociation.com, and we'd be more than happy to answer that for you. We're happy to throw out a comparison report if you're looking at a particular annuity or two and you want to compare them to this particular annuity. We'd be happy to do that. Or if you're just looking for some recommendations or some advice, that's something that we'd be honored to do as well. So thanks for tuning in. Hope everybody has a great day out there. And we look forward to serving you and your annuity needs very, very soon. Thanks so much. Have a great day.